And good morning, everyone, and welcome to the TriggerCharts pre-market rundown for June 11th, 2021. I'm Andrew Horowitz. I'm the co-founder of TriggerCharts. I'm going to teach you a few things about trading today and go through some of the questions that you may have and give you some insights into our indicators that we utilize for our trading and why this is the number one overall indicator from a rating standpoint, as well as a usage standpoint in the trading app store over at TradeStation. So buckle up. We're going to go through some of that. Before we do any of that, of course, I got to mention that this is for educational purposes only. It is not a recommendation to buy or sell any security. It is not anything more than strictly a discussion for purposes of educating you on how to make you a better trader. Of course, investing involves risk, and you have to make sure that you understand that you could lose all or part of your investment. So be careful, be smart, utilize your skills, and we're going to talk about some of that today. So let's start off where we are in the morning today. We're capping off a couple of days of decent returns overall in the markets, kind of a consolidation mode overall when it comes to the markets right now. What we're seeing is that there is a significant amount of push and pull. The idea that inflation is here, but yet do we worry about it, is kind of very prevalent in the markets right now. That is what is really on traders' mind as we go through this rotation. At the same time, there's a question about, how much risk can we actually take? How much of the envelope can we push in terms of risk, utilizing options, utilizing a variety of other instruments? So we talk about that. Also, of course, our tools that we show you, that you're looking at on the right side of your screen right now, are utilized by a lot of people for Forex or even cryptocurrencies. They're utilized for equities as well as ETFs, etc. So let me give you a couple of things to talk about here. First of all, in the chat, I'll put the word here, right here. Put your stocks that you want us to look at. We'll get to that as we go through things. But I do want to talk about some of the things. First of all, the YMs, the Dow Jones futures up 106, the S&P or SPOOs up 8, NASDAQ lagging a little bit, up 16. Gold is down ever so slightly today after a decent run getting back towards 1900. Crude oil, amazingly, at $70, and Bitcoin at 37,300 and change. So I think the theme that we really have to talk about and what everybody is kind of wondering about is, who cares? I mean, do we care about valuations? Do we care about inflation? Do we care about the debt load? What do we care about? What do markets care about? I'm not talking about us morally or looking at it from a political sense. No, that's not what I'm talking about. I am talking about the idea of, what do we care about from a trading standpoint? Where are markets headed, or at least where is the bias? That's what we're really focusing on all the time. When we look at the KRI indicator, the key reversal indicator, we look at the bias on equities overall, big picture indices, the S&P 500, the Russell 1000, the Russell 2000, the Russell 3000, the NASDAQ, the Nikkei. All these things give us directionality. And remember something, oftentimes you will find that the directionality of a major index is really what pushes stocks in that direction. About 80% of the market move can be, or of a stock's move can be really looked at as overall market movement that helps it along. And that's because of all the index buyers out there, and there's still a lot of them. Now, there are some exclusions or caveats to that. Of course, we're seeing some of the meme stocks do some amazing things, whether it's AMC or GameStop, or whether it's Workhorse, which I've talked to you about many times here. I talked about the idea of Workhorse. I talked about Pets, which was up 58% one day last week. I've mentioned that name to you. So there are definitely some areas to look at from a trading standpoint, as opposed to looking at where are the investing opportunities. So there's two different things, right? One is trading. Trading encompasses the idea of short-term, either intraday or overnight or swing trading. Investing is a bit longer than that. Where you're going to buy something quality, where is that point that you want to buy that stock? Where is the point where you have to say, you know what, that's it, I'm done. I'm no longer going to hold that stock. But you're thinking about it as a long-term basis. Now, you utilize for investing a little bit more fundamentals and technicals together. What you're doing for swing trading or for scalping or for intraday is primarily technical. Technical is what we look at on the shorter term charts. When we look at the longer term charts, we look at investing. Now, what I talk about oftentimes here is a lot of the daily charts. That's the longer term charts. And I do that just for educational purposes only, because everything that we talk about, the structure, the patterns, the way that we see the breakouts, the bias, the colors are all the same on every single chart. Whether you are on a daily chart, a 30-minute chart, a 10-minute chart, doesn't matter. All the same concepts live and breathe exactly the same. We find there's a bias where there is no resistance when we look left. We talk about that a lot. That's an important thing to look at, not only on a daily, but also on 30. It's all the same. So the idea of who cares is really an important thing, because it seems that there is a lack of care, or better yet, let me say that there's more of a concern about making massive amounts of money immediately within a day than there is about the care about losing money. And that's what's happening when you see these meme stocks that have no underlying fundamentals that are really reasonable. I mean, AMC, really? All-time high? Dillard's? Are you kidding me? Wow. The underlying fundamentals are cleaned up a bit, because what's happening is that you're giving the opportunity for management to come in and sell shares. GameStop yesterday talked about a 5 million share secondary dilutive offering, and that obviously took down the stock very significant after the earnings call, kind of moving up a little bit today as we see this reflexive trade where it's down. It's like, oh my God, I have to get in because it's only going to get higher and buy the dip. Same mentality that you see with cryptocurrencies. No matter what the bad news is, whether we hear that, well, China's going to lock down and India says no, and there's going to be some regulatory and IRS review of this. It takes a day or two, and then everybody says, wow, look at the price, it's low, let me buy in again. So the buy the dip is alive and well. Maybe or maybe not, that will work out long term for some of these, but I would venture to say that fundamentals will lead on the longer term investing theme when it comes to some of this. Intraday trading, scalp trading, swing trading, hey, let's get to it. There's some great opportunities out there. So we don't really care, it seems, and as in the totality of investing, about some of the concerns that are out there, whether or not this inflation, whether or not the Fed's going to think about cutting back on quantitative easing, whether or not the debt load's really going to drag down economic growth for decades to come, and valuations don't seem to matter either. Economic data, well, there is inflation. It's hot. It's no question that we saw yesterday, the CPI and the other numbers throughout the last few weeks are hot. I mean, they're coming in strong. We are seeing it. Listen, does anybody think that there's no inflation, that you're just sitting there going, hey, I don't notice any prices going up? Whether it's the pump, whether it's education, whether it's your healthcare, car insurance, whether it's your overall, although my car insurance was a little bit cheaper for this 6 months, which I thought was interesting, but it was up a lot the last 6 months. The overall cost of food and what we're seeing from a standpoint of like Campbell Soup, where they are increasing wages and they're having a problem with the margins now. We're seeing that Starbucks running out of cups. And of course, again, wage increases. All of this is building into the big question, which is this inflation here to stay or is it transitory? The big issue that we're seeing right now is that there is this fight. There is this battle. There is a narrative that's going on and more of a hypnotic trance that is being predicated by the Fed that they are pushing on us. Inflation is transitory. Repeat after me. Inflation is transitory. If you see a lot of inflation, don't worry about it. That's what's going on with the Fed. All the Fed speakers come out. They talk about, hey, don't worry about it. It's transitory. It's just because we had a low level of inflation, obviously, last year through the pandemic. And right now we're coming out of it, and it's not going to persist. But some of the things like price hikes that we're seeing, Chipotle coming out with a 4 to 6% menu price increase. Get your burritos quickly before the prices go up is a very significant issue. These are things that are very hard to get back into the tube. Once you squeeze that toothpaste out of the tube, very difficult to shove it back in. And that's what's going on with the price increases, as companies really like the fact that they can have price flexibility and consumers are absorbing that right now. There's a limit to this, but inflation is here. The question is, here's the question, because that doesn't matter. It doesn't matter how much inflation we have, as long as the Fed doesn't do anything about it. Once the Fed starts talking about limiting their bond buying and the quantitative easing and starting to tighten their overall policy, whether it's through the bond buying or other other methodologies that they will do, whether it's going to be a possible rate increase eventually, whether it's going to be working in the repo markets. There's a lot of things that they have and tools that they could utilize to kind of tweak the system, somehow a little bit behind the scenes and some more overtly. The last thing that they will do is raise interest rates. That's the question. That's the bottom line, because that's what everybody sees. Nobody really thinks about how does the quantitative easing affect me. Nobody thinks about, what about the repo market? What they think about is when interest rates go up, that is the signal that the Fed is actually doing something. So we are seeing inflation, and the question is, how is that going to impact things like the NASDAQ when we saw that there was a significant amount of movement on the upside to the yields of the 10-year and across the entire yield curve for some time. And all of a sudden, here we are, we're back down under 1.5% as of yesterday, even with a very hot inflation number. Something doesn't make so much sense, by the way. All right, general market psyche. Well, we look at the KRI and we see that we found there's a couple of areas right there. See that again? We saw that overdone. We saw the clusters formulating here. I'll do some circling so we can see this really well. We saw some clusters formulating, and then we saw it above the 4%. And then it kind of, we saw this movement down of the markets right there. We're in that kind of range that we're in a hot market condition, but it could continue higher. It says here, you read to the right, it all updates in real time when we see any changes, what exactly is going on here. But usually when you see these cluster form, a couple of days later, you see this roll, right? Pretty consistent. May take 3, 4, 5 days, but you do see the rolls usually. Right now, we are hot. We're hot on the KRI, key reversal indicator. This is available in the trading app store. I think it's cheap. It's like $20 a month or something. I don't remember the exact price, sorry. But it's pretty cheap. We made it pretty cheap. It does one thing. It does one thing only. You cannot change the symbol. You cannot change anything. You put this on your screen. Once a day, you look at it. You see where, or twice a day, 3 times a day, morning, noon, and close. You look at where we are, where we finish. Are we above the key levels, below the key levels? Are we in an area that may signal that there is a reversal happening? And that's what we look at here. That's all it does. That's it. Simple. Again, you can't change anything. It's what it is. You'll need a couple things. You'll need some options access, and you'll need a few things in the instructions on the site. Go over to the trading app store and look at key reversal indicator, and you will find all the information you need to know about this. So that's that. It also feels that the bulls are kind of foaming. I get this feeling that they're walking in, they're like, oh, let's buy. Oh, it's down, let's get it. Let's look at AMC, let's look at this, let's look at Build-A-Bear, let's look at BlackBerry. Oh my God, let's go after Clover because it's down so much. I mean, really? Let's find those shorts interest and stick it to the man. Let's get out there, go. I mean, seriously, I'm not kidding. That's kind of like what's happening. Are you feeling this too? Are you seeing that that's kind of the momentum that you find? You get sloppy trading. And, you have to be careful not to get kind of caught up in that. Utilize your tools, utilize your levels. One of the big things that you get when you use indicators is a level of confidence. And in more particular terms, when you get multiple confirmations along either multiple indicators, like when we use the aileron and the autopilot, and I'll show you that in a second. When you get multiple indications that give you a high level of confidence, it gives you a better entry, exit, or staying power in a trade. I like to have multiple points of confirmation for confidence in a trade. It's really important because if you enter a trade weak, and let's forget about diamond hands, let's forget about weak hands, just kind of put that aside. If you enter a trade weak, well, I don't know, but I'm going to try it, you're going to get pushed out very easily. If you enter a trade too strong, where, oh my God, this is the perfect trade, I'm never getting out of it, you could really either make some money long-term or really take it down. Well, it's down, I'm going to buy more now. Well, it's down, I'm going to buy more. The indicators say that really we should be at a short positioning in here, a bias towards the short side, but the hell with it. Damn the torpedoes, I'm buying more. Don't do that. Utilize the indicators, utilize the corresponding biases that are out there. Be smart. Take your emotions out of it. Cut your losses quickly. Let your winners run. These are very old school, standard ways of winning in the markets. If you've been losing, slow down, hold up, rethink it. If you've been working on a 5-minute time frame and just can't seem to get it going, stop. Maybe move to a 30-minute. You may say, well, 30-minute, oh my gosh, it's so long. Change it up. Do some simulated trading. If you're on a winning streak, keep doing what you're doing. Don't change. All right, pandemic. Well, we still have a risk level there in the pandemic. There's less, but we have these new variants that are coming out. Big news overnight that a Royal Caribbean, I think the Celebrity line, there was 2 people in the same cabin that were diagnosed with COVID yesterday, freaking out the sailing ships. once again. Big recovery in China. Well, we saw a big move in manufacturing. Industrial profits are up significantly. And we are now, I believe, at a point of a post-pandemic high in overall productivity and general growth of the economy there. We're not so far behind here. So things are really good. A lot of that movement into the stimulus that moved into the economy helped out a great deal. Federal Reserve. Well, where are we with this? Because this is really, I think, what is leading the markets. If you saw the inflation number yesterday, and you saw the lack of reaction, or maybe even a positive reaction in some areas, you'd have to think that, it's all about the Fed right now. Any person that was looking at the numbers of the inflation yesterday and looked at the levels of where we are and the likelihood of what should be done to tamp down inflation and where we're going with this longer term would say, you know what, we're probably going to be in for a tightening move. Now, yes, we have the stimulus coming from the Fed. They're still bickering and bantering. I don't know what's taking so long. Obviously, it's a lot of these pork barrel stuffing moves that are going on, the earmarks that now are magically allowed again. Once the Democrats came in, they could do earmarks now. We were all against it for years. Now all of a sudden we can do earmarks again. So now they're probably stuffing that bill full of all sorts of crap to the point that we can't even recognize it when it comes out on the other side. So here we are in a situation where we know there's some stimulus coming. The Fed says, you know what, even though there is inflation, it's transitory. We saw bonds move down, yields move down yesterday on a hot inflation number. That's not normal. Well, we do have an FOMC meeting next week, and maybe they're going to explain some of this, but you know what? The market is really, I think, again, you don't want to move past where the market is, but the market seems to be taking this too much in stride in the longer term basis. If, in fact, they are, by happens to be right in the fact that you have inflation that is going to be transitory and quick and out, well, then that worked out well. But inflation numbers maybe forced the hand of the Fed. So we're going to look at that. Next week, we're coming out with economics, retail sales, PPI, housing starts, building permits, the FOMC rate decision, as well as leading indicators. So we are seeing a little bit of weakness in the housing market right now. The mortgage applications came down a bit, with all the, I think, the lag of the heat of lumber prices and a pricing overall, the pricing of houses. I think we hit a little bit of a peak there when everybody was coming in with bags of money, wheelbarrows of money, suitcases of money, overbidding, telling people they will name their first child after the homeowner if they sell the house to them. I mean, oh, hello. That's a little bit on the edge of what's going on. Some of the stocks we're going to look at is right down here. We got Clover, Workhorse. We got Wendy's. That got caught up in the trend. Of course, Tesla. We'll talk about a few of these others. All right, so what you're looking at right now, let me kind of focus on this. Let's start at the beginning. What you're looking at right now is the, basically you have the indicators right on the screen that you're looking at right now, which is the packaged Commander series, which has the multi-time frame autopilot on the top here, where you could have one symbol and across rows you can read what it is on. And this one is a 30-minute, 60-minute, 240 daily and weekly. You could customize these down to 30 minutes. Can't get less than 30 minutes because everything is calculated off a 30-minute bar. That's the way we're able to program some of this. More importantly, so you have everything here. The interval says 30-minute. More importantly, I think the thing that you have is you tied right to your charts. And on the chart, this left one will look here. This left chart here shows you, well, we have the radar, which is all these lines, which is a breakdown, a more granular look at the aileron, at the altimeter, excuse me. I take that off so you can see it. That's what it looks like. We put on the radar, that's what you get. So if you want to look at a granular look of where the real high volume nodes are and where that spread is, and we teach all this in what we call on our radar education, and you can see different formations. Like right here, we have a capital B. If you can see that, I'll draw that really quickly for you. See, this is a B. This is also a B. This is what's called a big D, which is a normal distribution. So we look at these, and what we do is we see what kind of letters that we form just to make it easier on us, whether it's capital P, a little b, a big B, a D, and we can then formulate what the levels are if you get past a certain point. For example, right here, we're looking at silver on a 30-minute. You break above these levels of 26, you really have nothing up to about 26.04, which we kind of put over here. 26.01 is a buy point. 2601, we're right in that right now, 2612. And what do you have, man? You can go right back up 2640, and then you break out above the next level, 2648, and then it's sky's the limit on the silver. So you see that in multiple, first of all, occurrences, right? So we have multiple time frames giving me multiple levels of indications for confidence. So I have multiple confirmations just on different time frames. Then what I look at is my aileron. Aileron is a different package. You have to buy this as an add-on in addition to the Commander Series. Again, not expensive. The aileron chart. You can see that we are all green up here. The momentum is in our favor and now starting to pick up. We really broke that momentum downtrend back in April in silver, and it's been off to the races ever since. We talked about this box. We've had this box on here for a while, which was the consolidation range. And once I said, if it broke out of that, you're in great shape. You're right at the top of that still. But you know what? If you start to get the momentum moving this direction, there could be a significant bust out, especially because you're seeing all of this coiled spring action right here. This whole range right here. Very, very tight consolidation going on right now. So, again, you want to have multiple confirmation points. Gold seeming to be inside of a consolidation zone. You can draw a box around here. It's right here to look at the same way. Just kind of grab your box tool, and you draw a quick box right there. Get out of that. You got some great opportunity on the upside. What else we got? Bitcoin still in a general downtrend. Called the downtrend a couple different times. This is the ETF. This looks terrible. This looks terrible. Everything looks terrible. I mean, you got some support right here where you needed it, 2780, 2437 is an area. This is something we called some time ago. We looked at this and said this was ridiculous. It's about 80. If you remember, we kind of thought about this as a short candidate. Kind of coming down to about 2698 would be where it is. That's the Grayscale Ethereum Classic ETF. I don't know. They just ran it up for no reason. Ethereum is holding pretty well. Is Ethereum the actual Ethereum? No, this is the direct currency. Terrible overall look right now. Getting to a bottom level of a possible oversold range on the aileron. But you know what? Your support really is right here at 2340. Your next level is about 21. A good level at 1900. Over the weekend, you put in a price that you want to look at 1900. There's a lot of good support at that 1900 line. Let's put that in here. I like to draw my lines. 1900. Kind of support right there. Sometimes you can get that over the weekends. Bitcoin not looking much better. Kind of popping up a little bit. You know, we have all these lines we did draw before. Landed perfectly on all the support lines. But again, you look at the aileron, momentum is not on its side. Clove, I mean, this kind of chart is like impossible to deal with. Yes, we did call a long here at $8 and you ran it up, came back down. You would have, you know, if you followed the actual daily, you would have got out at 18. Not bad, not 26, but 18. You know, the fact of the matter is this is kind of trying to tickle up a little bit to the 14 range, up about $1, 1.3% today, about 26 cents. This is sloppy. This is a Chamath Palihapitiya deal. This is a SPAC. Everybody hated it. There was some fraud or some kind of allegations of some sort with this. It's like, this is a no touch for me, unless you want to do a day trade. Workhorse, I talked about this. I talked about, you know, this range that we had and this basing that was going on. I drew this out. I said, hey, you got up to about 20 bucks or so. That looks like it's going to be the top end opportunity right here. Saw a miraculous move from the 7s up to about the 18s over the last week and a half here. Up about 3% today at 1550. You know, you need to break up above really this 1896 to get much higher. But you're in this consolidation range, and right now it's caught up in the meme. This is a company that makes box-style trucks for delivery, like postal trucks. And there was a deal that went through with the government and went to Oshkosh. This is right here, the news right here. The news that Oshkosh got the deal. But Oshkosh was making hybrids. And I said, you know what? All we need is a small deal to get done with the government for them to throw them a bone. And this thing's going to move pretty significantly. Wendy's, this was just, I mean, again, somebody got a hold of this and, oh, Wendy's, let's get it going. And then just didn't work so well. Space, I've been talking about this forever. Every time we base out, I like this stock. We got a nice buy signal at about 20 bucks, right about there. Still in the buy zone up to 37. They needed to do a test flight. I told you about that too. I said, we need to do a test flight. All right, let's look at XLB. This looks a little weak to me. This is the ETF, the materials, kind of rolling over a little bit. You see this kind of rolling over? This isn't a consolidation. I like this for a short, down to about 83, about $2 down on this. $4 down, $3 down. Another potential short is Planet Fitness, holding support really well right now. You need it to break down to really get very active. Right now, we shorted up here a little bit on the trade down, somewhere right about 79, 78. I think that you want to really, before you push the next level, is to get it below about 75, and really below about 73 is the line. So I'll kind of put that right about there. That's your kind of real line in the sand. Below that, you got some real trouble in this stock. AMC, same thing. You got a bullish bias call here at about $14. Traded out yesterday at about 43. Not a bad move. All you have to do is pay attention to your colors. Yellow is a indication that is something you want to look at and possibly get involved in. Pets had a couple of good rallies. You got in here. This is probably hard to get into. You got to hold this on that support line and say, you know what, I'm willing to hold this. Moved up from 27 to 45 in a couple of days. Back at, what are we at now? The 32 range. Still a nice little move on that. Fastly, I have no respect for the stock. Never have, never will. Some decent support here from a trading standpoint. Got a couple of those nubs, but this stock just cannot seem to get itself together. We got Viacom, somebody's asking me about. So Viacom's got a massive consolidation. Yeah, I agree with that, which they mentioned. By the way, put your stocks in there. Look at this consolidation that you have there. Very good consolidation overall that we're looking at. What we're seeing there is that there is a very substantial amount of potential for a coiled up spring, where you see these kinds of consolidations from back in, let's call it March, which we did see a little bit of an overdone. Listen, go back a little bit. Remember, we're talking about a $31 to $177. So you look at this in a little bit of different sense sometimes. Let's go to the weekly and look at that. Weekly, you're still consolidating, right? You still got that consolidation going on. So really your range right now is, I would say, you're 150 to about 184. Either side of that really gets you going. If you can get above about 180, that we have a line there, right? That blue line, which is the high volume node, point of control, also called the cruise. So when you look at this, somebody's, look at a VAC. That's a good point. That's a good stock though. I like that one. That's a good point somebody mentions. There's Viacom. All right, VAC I like. That was a misstep. Let's go back there for 1 second. What is VAC? Oh, Marriott. Yeah. Yeah. Marriott Vacations. Interesting here. Actually, I like that. Put that down on your list. I like that one. Let's look at Viacom. Let's look at this on a daily. That was good. Sometimes you miss, and it turns out to be good. Yeah, long-term consolidation here also on this. This is opposite of what we just saw. You need to get above, clearly above, I would say, right here. Let's kind of put our line so we can, I always lose these things. There we go. 47. Where are we now? 41. I mean, I'd like to see you get above 47. If you want to play a little bit to try to get going on that, you get above that, you really have a nice opportunity to fill that gap up to 62. But lots got to go right in this. This was really a significant amount of money put in by people that were just pushing it up, and then they collapsed. A lot of selling, a lot of concern about this. Just an ugly looking chart overall. Going back to this, much different. I like that. Kind of opposite look where you have the momentum that was going in your favor. And we're starting to get the momentum moving to the upside. So kind of VAC and VIAC. This one's kind of moving back up. But again, let's kind of zero in on here. Just can't get above anything. You want to play for above 44? That's great. Anyway, thank you so much for joining me. I want to let you know that, of course, we are here each and every Friday. Go over to the TradeStation Trading App Store and check out all that's there. 4-hour free course if you do subscribe. Not a trial, a paying subscription. 4-hour course we will give you for free. Just let us know. Send a note to support@TriggerCharts.com. Also, this is being recorded. It will be on YouTube as well as on the TriggerCharts.com website. Thank you so much for joining me, and I'll see you again next week.